Hello folks, this is Raj Sastri from Raj Option Trading. Today I want to talk about one of my favorite sectors. It's the defense sector. As you know, defense sector is very important for all the nations around the world, and also it's one of the very important sector for the global economy also. And the growth of this sector depends on the government spending. So according to businesswire.com, the defense industry is going to grow by 3.5 CAGR, compounded annual growth, between 2019 and 2025. So now let's look at what are the top companies in this sector and how we can benefit by investing in them. And here are some top companies. First one is Maxar, second one is BoozAllen.com, then we got Axon and Palantir. Then we also have traditional companies like Lockheed Martin, Raytheon, General Dynamics, Northrop, and so on and so forth. We'll go and look at them also. With that, let's dive in. And these are some favorite companies. This is organized by the growth or the stock price appreciation in last 1 year. We got UAWS, which is AgEagles, AMMO, EHang, Maxar, RADA, and so on and so forth. And some companies are a little pricey and valuation is a little bit sky high. We'll look at them too and take it from there. With that, let's dive into why I selected these companies and the reason behind them and any caveats that we have to think about. With that, these are the top performing defense stocks, and this is organized by 1 year performance. The one at the top has performed very well in last 1 year, 2111%, and it's in the descending order. And the stocks that are highlighted in bold are my favorites. Um, and I also have some caveats as example. If you look at first one, AgEagle, it's got a high valuation, 360. So you got to buy this on a pullback. I would not, buy it, right away. I would wait for a pullback to buy it. And same story with EHang. EHang, it's got a price to sales ratio of 100. This one already has pulled back. If you want to buy a little bit, that's fine. It also has got some, lawsuits and some short seller breathing down their neck. So I would buy a little bit small quantities and watch out and take it from there. And next is Virgin Atlantic. It's Richard Branson's company. They want to do commercial flights to the space, and this company has got sky high valuation. But what I've seen is really this company, kind of stock goes up and down a lot. Right now they're down. So it's okay to buy on a down day because stock kind of fluctuates and you can make some quick money off of trading this stock. And then we have Maxar, which is one of my favorites. Palantir, also one of my favorites. Axon, and so on and so forth. The way I selected these companies is really, one is the stock performance itself in 1 year. Second one is the revenue growth. I want to see the revenues growing, year over year. I also look at the debt and the gross margin and PS, the price to sales ratio from a valuation perspective. So those are the criteria I use. That's why by looking at those, if you look at this here, some companies you might think why Boeing is not selected, mainly because there is a negative revenue growth, 14% last year. Doesn't mean it's a bad company, it's a good company, but performance has gone down a little bit off late. But on a down day, this company gives the opportunity to buy. I would buy a little bit, it's okay, but mainly they have the revenue growth is negative. That's why it did not get selected. With that, let's go into a little more details behind some of these companies and see if how they make sense. We got some more here. For example, Raytheon Technologies, revenue growth 40% and a good gross margin, again, double digit gross margin. Then we got Booz Allen Hamilton, Huntington. 908 Devices is a relatively new IPO. I think it's last year they came to the market. And then you got good old companies like Leidos and Lockheed Martin, Northrop. These are also good companies. They got positive revenue growth and also positive gross margin. With that, let's jump into maybe four companies in a little more detail and look at the thesis. First, let's look at Maxar Technologies, ticker symbol MAXR. This is a trusted partner. They kind of do Earth intelligence and space infrastructure. They deliver value to government and commercial customers to monitor, understand, and navigate changing planet. And they also help with the broadband communications and explore and advance the use of space. It's a good company. They kind of look. They have a lofty vision to really look at Earth intelligence and help government and commercial customers around the world. The CEO is Daniel. He's got 90% approval from his employees, which is a good thing. And the market cap itself is not big. It's $2.7 billion, and the stock price is around 43. And if you look at the stock chart itself, I like this chart. It's kind of in the beginning they had some hiccup, but now they're doing very nicely, and it's a consistent grower. And they got $27 million cash, and they got good amount of debt. Most of these defense companies, they have a lot of debt on their balance sheet because they have to invest heavily into the product itself. So with that in mind, if you look at the market cap on a quarter over quarter basis, they have done pretty well. So in the beginning, like we talked about, they had some bump or a little bit downside with the COVID, but they recovered. From March onwards, they grew from 641 to 1.9, then to 2.5 to 2.36. Now they're 2.70. That tells me basically they are grabbing the market share. They're really improving or increasing their market cap, which is always good. I like to see accelerating market share. Next is the revenue. If you look at the revenue itself, they have been consistently growing the revenue. They had a little bit bumps, as you can see in the beginning, but now they have been growing the revenue, which is a good story. Year-over-year growth, it's not positive at this point, but Wall Street is giving blessings to this company because this company seems to be investing a lot in their own platform. That's one of the reason they have burned some of their cash. That's why you see the revenue is negative. And they've been surprising Wall Street like 3 out of 5 here, and on the revenue side, and they've surprised negatively a couple of times on the EPS front. And they've got good gross margin, and they're still not making money. That's why net margin is negative in the latest quarter. But in the past, their net margin was positive a couple of times. So I think overall, companies still in the early trying times, but they seem to be making good moves. What we'll do is we'll quickly jump into their latest quarterly earnings and see in a couple key highlights and go from there. So Maxar Technologies, their quarter Q4 ended in 31st of December, and their earnings was on 24th of February. So their top line, growth, 6% top line growth, which is revenue growth, and 16% EBITDA, which is good. And they are into space infrastructure, and they also had some new talent in their software area within the company. And their backlog, their booking, the backlog itself grew by 17% year over year, which is a good story because solid backlog it's always good to have. And they had 80 million they absorbed for their enhanced view deferred burn down. So I think they had some burn down with their enhanced view, which is understandable because they are investing heavily into their own products. From an outlook perspective, they expect the net cash used in operating activities to be between 70 75, and more importantly, they think they can have a increase in year-end cash guidance, which is a good thing. They're going to probably increase the year-end cash guidance. And they're also, as you know, doing earth intelligence, and they had some key wins, and they also deepened the relationship with the multiple agencies, including National Reconnaissance Office, and intelligence agency, U.S. Army. Basically, they're working with a lot of these government agencies to really help them out with this earth intelligence. And they also expanded the relationship with the large technology company with a multi-year contract. So it's a good story. And they also, they got awarded with the phase two of U.S. Army's One World Terrain, which is a big contract. So overall, looks like they are set up for a better future in better growth, which is always a good story. So this is one of the reasons I'm a little bit bullish, because they are you know deepening the relationship and working with multiple agencies, and that will help them to grow in the future. With that, let's go into our next company. Overall, I feel this company is a good one to invest in. It's a small company, $2.7 billion. Stock price is $43. Lot of room to grow in front of it. And this whole area of earth intelligence is in the early stages and a lot of room to grow. Next is Axon Enterprise. This was a company earlier days. You might be knowing a company called Taser, used to go up and down a lot. Now they're matured into a company called Axon Enterprise, or Axon in short. And these guys have a bold mission to protect the life and enhance public safety. And if you talk to any police officer or law enforcing folks, most of them use Axon's body cameras that will kind of help them to look at the evidence, and also it can also record. It will store all the recordings in cloud. So it's a very good story that way. And these guys have made their pitch into software side. They have all this cloud managed software that can transcribe. It can also store, and it can also help you with the what to watch, what to look for, and helps with the evidence management. In a very good company, and 83% approved the CEO Rick Smith. And company is around $9.63 billion market cap, which is has a lot of room to grow, and stock price is around $145. So with that, they got good amount of cash, 561.96, and low debt. Unlike most of these other defense companies, this is a debt light company, not too much debt. And I love the stock chart here, consistently growing, not too much hiccups. Now there is a opportunity to buy. It's a little bit down now. Very good opportunity to buy, for the long term. And from a market cap perspective, as you can see here, very steady ID, 4.36 back in December, increased to 4.2, a little bit bump here with the COVID, as you can expect, and steadily increased after that. And now it's $9.63 billion. That tells me, the software story and the body camera story, cloud stories really has legs to go, and this company is doing the right choices. And from a revenue perspective, as you can see here, with the exception of early last year, it's been growing steadily, which is always a good story. And the year over year growth, it's a solid year over year growth, as you can see here. 27, 25, 27, 31. I love to see this year over year growth continue, which is always a good story. You don't see this type of year over year growth in typical defense companies. This is a software play. That's why you see a good year over year growth. And from a revenue surprise perspective, all along, they surprised Wall Street with a positive revenue surprise, which is always good. That's one of the reason for consistency in the stock chart with the, not major blips here. And from an EPS perspective, they have surprised almost all, but exception of back in 630, they had a miss here with the EPS. Solid gross margin, it's only going to improve with their software play, and they're making money. Net margin is positive. So overall, I feel very bullish about this company. I myself am investing in this company, and it's a very good company. With that, let's go into their quarterly earnings transcript and see what we can glean from it. So Axon, Rick Smith is a CEO, very good CEO, and they are really working on um, their boldness is really, they want to move beyond the bullets. So this is where they want to become this company that makes a bullet obsolete, as an example. And it started with the taser, but now their taser is really becoming more popular, and they want this to outperform the traditional industry of bullets and the traditional industry in the firearms. And they're also inking or basically getting more and more contracts from government. They got $13 million contract, and they also signed a biggest taser contract, $20 million. And in 2020 they passed 1 billion in total bookings, which is a good milestone. And they're also helping with the safety plan, a 46 million officer safety plan. They got one of the good award here. And they also have the capability for auto transcribe, so that way you don't need to worry about any transcription. It does the it transcribed by itself. And their net promoter score, it's off the charts. It's really telling us their company and their software is really very highly regarded. And from a outlook perspective, they have few key themes for 2021. Grow core, scale new products, unlock new markets. Basically, they want to grow. That's a good story to have. And they also want to work with these agencies and make sure they can train them very effectively, because training all these officers is very difficult. And they're working on the VR, which is virtual reality, and some of these newer techniques instead of traditional classroom. And they expect the year over year revenue to grow 26%, which is a good story. And they expect their taser segments to grow, and also even the software also to grow. So overall, they expect their body cameras and software to grow, which is a good story. So with that, let's jump back into two more companies and go from there. So in a nutshell, I love this company. It's a great company and a lot of growth ahead. And as you can see here, very nimble company with the small debt compared to other companies. So with that, let's go into next company. It's Booz Allen Hamilton. It's again, they're into management and technology consulting services. They offer analytics, digital solutions, engineering, cyber expertise, and whatnot. And it's a $10 billion company, and they got stock prices around 79.61, and they got good amount of cash, and they also have debt, which is typical of these defense companies. And stock chart is very steady eddy type stock chart. As you can see here, higher highs, which is always good to have. And from a market cap perspective, it's again very steady eddy, as you can see here. A little bit blip in 331 due to COVID, but after that, a little bit bump here and there, because these guys expect a lot of contracts from the government. Whenever there's a delay in the contract signing, their revenue gets impacted. That's why you see some blips here and there. And from a revenue itself, as you can see here, nice acceleration for most part, with the exception of March, and also 12/31. This is where they had some delay in signing contracts. Year over year revenue is a little bit low, which is typical. Typically, during the new presidency and all this uncertainty, that's why revenue typically goes down during this time. But overall, I think they did okay. Revenue surprise perspective, they missed latest quarter. That's why there's a bump in the stock price. So this stock, is, I think it's good to purchase on a pullback. So right now this is a pullback here. And from an EPS perspective, earnings per share, they've been surprising positively, which is a good story. And they got solid gross margin and some net margin. They're making profit also. So this is a company that steady Eddie type company, keeps chugging along pretty consistently, with some hiccups along the way depending on the government spending. But overall, pretty solid company. You can sleep at night with this company stock. Now let's go into a little more details around the company's earnings transcript and see what we can see. So Boozel and Hamilton, their earnings call, they basically highlighted some of the delays in the procurements, especially with the presidential election, last year. So this is why they missed their earnings or revenue surprise. And they also they're confident about their business, so they increased their dividend by 6 cents. So that tells us, hey, what, they are confident about the future. And their revenue increased by 3%, which is a good story. Backlog also grew, which is again good story. And they also repurchased the share. That tells us they got confidence in their own company. They're buying back shares. And from a guidance perspective, they are they are telling us they're expected to grow in 4.8 to 6%, which is their typical growth rate, which is tad low, but I think it's that's why stock came down. But it's okay. It's not negative. It's pretty okay for this company, I would think. So let's go back here. So overall, Boozel and Hamilton, I think it's good to buy on a pullback, just like the one we have, as there is more confidence, and with this new government and the uncertainty is gone, there may be some good play. Even though folks generally say, one party may be more favorable to defense contractor versus others. Not sure how much truth behind that. Next, let's look at one more new IPOs. It's the Palantir Technologies (PLTR), and this company is into software. They used to work primarily in the defense in the beginning, and now they also work with corporations and the commercial area. They help with the unlocking the value of the data, and these guys have large amount of data, and they got a good platform. And they help with the diverse problems like disaster relief, healthcare, drug discovery, human trafficking, counterterrorism, and whatnot. They got a lot of these great themes going on. And stock price is around $25, which is a good price to buy. Market cap is $45 billion, and 86% approve the CEO, Alex Karp. And one of the legendary founder, Peter Thiel, I think he still works with this CEO here, which is a good story to have. And with that, they got good amount of cash. As you can see here, they did a IPO, I think it's last year, and they did not go for any roadshow. They just want to bring the company to market. They did not go through any venture, any of these big investment banks, which is a good story. They got a lot of money in the bank and little debt, which is very much manageable. Stock price is $25, And as you can see from the chart here, after the IPO, they've shot up like anything. I think there was also some short squeeze in the beginning. Now they're kind of getting stabilized. I feel confident, these guys can do very well. They're expanding from their core defense and government type, contracts into commercial area also, which is a good story. And from a market cap perspective, a very nice growth, from 16.4 billion to 42 billion to 45 billion in a very short span of time. That tells me these guys are doing the right thing and they're investing in their software and their product. And revenue also grew nicely, and good year-over-year revenue growth. Um, and revenue surprise is also very nice. It's they surprised on the revenue EPS side also. So overall, I feel this company is doing good. Good stock chart. Now let's go into the earnings transcript and see what how they have done. From an earning transcript perspective, they are very clear. More and more this world is depending on the software, and their strength is in the software. They have very good data, big data software that can help to look at huge amount of data and glean some insight. And they also helped 100 commercial organizations. Remember, it started as a government contractor. Now they're helping the commercial organizations also, which is a nice expansion for them. And they are also spending a lot of money in the R&D, which is a good thing. They can grow their company. And they also announced a groundbreaking partnership with IBM. This is where IBM will sell their software using IBM's huge sales force, and they also use some of this AI based technology from IBM. So it's a good partnership. I think with this IBM partnership, we can see sales accelerating for this company. And they also signed two large deals, which is always good. And they have some, the full year government revenue rose 77%, which is always good. And they also, they're also doing some adding headcount to their sales force to sell more triple digit headcount add. And their pipeline is very good. This is always something that we have to look out for. And they also, the way they grow is really they will first land and then they will expand. Typical land and expand in the software world. They acquired some good companies. Now they're going to go through their expansion mode. So this is what will help them to grow revenue. And their software is very sticky. Once a customer signs this multi-year deal, they will normally stick with this customer. So they're also telling us, only 8 of the Fortune 1000 and 12 of the Global 100 are their customers, and they got a lot of room to grow. So overall, I feel Palantir has got a great story and great growth ahead. And even though market cap is 45 billion, they got a lot of room to grow. I'm really confident about this company, and with stock price being such a low price right now, and market cap has got a lot of room to grow, I feel confident about this company. So with that, let's look at the monthly performance of some of these companies and see what we can glean from it. So if you look at, I will not go through this in detail, but look at some of these trends and go from there. If you look at UAWS, their monthly price is listed here, and we got 52-week high here, stock price over here. And if you see here, the price is at $7.46 right now, and it's 57% off of the yearly high. So one thing I was talking about earlier, these type of companies you got to buy when they're down a little bit, because the low price stock. So right now they're down. We could buy some at this price. And, it's a low price stock, and hold it for a while. And same story, the POWW. It's 6.21, and it's 37% off of the yearly high, which is okay to invest a little bit and keep it from there. And whenever they have pulled back, they always came back. So that's one thing I always watch for. Do they bounce back from the pullback? If that's yes, I'm not too much worried about it. Next is EHang. EHang, as you can see here, is fallen pretty hard, especially after the short seller's thesis that company has fabricated some details. But they're trying to recover from it. I think now they made a solid base. From this point, probably they will bounce back. That's why you see a small bounce back in March already. So I'm sure this will bounce back. If you see their history, they've 20% drop, bounced back. It takes some time, but generally they always bounce back. So if the history is of any evidence, after this 20% drop, next month 10% up, here 30% drop, already 15 days 7% up. So I think they've got a good chance to bounce back here. Maxar, again, good story here, very nice. They have one or two, couple red here, but it's a good company. I would invest in it. So you get the trend. So if a company is really can bounce back, then I think there's a good chance this time also it will bounce back. So I would look for such signs and take it from there. So with that, let's go into the summary and see what we can make out of it. From a summary perspective, these are the stocks that I would invest in. UAWS, POO. You can look at the list here, and I also threw in some of the steady Eddie good old stocks like Lockheed Martin, Northrop, and Leidos. Some of these companies are very tested, true and tested companies, and also companies like Raytheon with a lot of expertise in the space, and SAIC also. So I think these are good companies, and solid growth ahead. And I also like these newer software type plays with the Axon and Palantir that we talked about. Those are purely software play and have got a lot of room to grow. So with that, thank you very much and happy investing.